This is something that I've been predicting for quite some time now. It was inevitable. I always thought it would be an external dollar crisis that would set these events in motion. I didn't realize that we would do it to ourselves, but we have. We've pricked our own bubble, and there's a lot of air that's going to come out of it. Donald Trump looked at our huge trade deficits and just concluded that the trade deficits themselves were the problem, and that they must be the result of foreigners cheating us and ripping us off. Well, the reality is the trade deficits are the symptom of the problem. The problem is here in America, and we're not getting ripped off by anybody. Nobody's cheating. The problem is we as Americans, for decades now, have lived beyond our means. We consume more than we produce. Now, how is that possible? Well, we go into debt. We sell off our assets, we outsource our manufacturing, and we borrow money, and we get to live a standard of living that's higher than what we're really entitled to based on our collective productivity. Now, it's the rest of the world that makes that possible. They produce what we don't, they buy our assets, and they loan us the money. And so what does that mean in America? Well, we have more stuff to buy at lower prices. We get lower interest rates because of all this foreign capital, and our stock prices are higher. So we get to be rich on paper because we have a high stock market, and we get low interest rates and low consumer prices. Now, according to Donald Trump, that's the world screwing us over, ripping us off. And he wants that to stop. Well, if that stops, well, now the ride on the global gravy train is over. We can't live beyond our means anymore. So we have to live within our means, which means we have to consume a lot less. We have to save a lot more. It means that our interest rates go way up because we're no longer borrowing all this money from foreigners. Our consumer prices go way up because we're no longer getting all their stuff. Our stock prices go down because they're not buying our stocks. So Americans are going to see a huge decline in our standard of living and a big drop in their net worth. But I mean, that's liberation. I was warning that Trump was threatening to liberate us from our standard of living and liberating us from our stock market wealth. That's what's happened. And it's just starting. This is going to play out for the rest of the year, next year. This is a huge trend that's just going to get more and more momentum. Gold's up over $250 in the last 3 days. We're accelerating. Last couple of days, we were $100 a day, and maybe we'll be up again. Maybe we'll be up another 100 by the time they close today's trading. But what's happening, and what I've been telling people was happening all last year, as the price of gold went from 2,000 to 3,000, and nobody cared, and nobody was buying it because everybody was, sidetracked by Bitcoin and all the talk about digital gold. Nobody but foreign central banks were buying actual gold. And the reason they're buying gold is because they're getting rid of their dollars. They are preparing for a world where the dollar is no longer the center of the monetary system, where it's no longer the reserve currency. And so if you're going to get rid of dollars, what do you replace it with? Well, gold is the most likely alternative to the dollar. And that's what they've been doing. Although I think recently central banks are probably also adding euros. My guess is that the Bank of China is buying euros as it may be selling dollars, because I think they need to replace Americans as customers. And the Europeans, there's more Europeans than there are Americans. And now that the euro is at a 3-year high and soaring, the Europeans are getting richer as Americans are getting poorer. And so all those goods that China can no longer export to America, they can export those goods to Europe. And as a matter of fact, China is not going to be importing any more goods from America. And so they're going to import a lot of the agricultural products or other raw materials that they used to get from us. They're going to import them from South America. And so now those countries are going to be richer because they're going to have more export earnings. And now they're going to be able to afford the goods that China is no longer shipping to America. See, Trump really overplayed his hand. He thought he had the cards. He had nothing, because it's easy to replace consumption because anybody can consume. We don't do anything hard by shopping. The hard part is production. Supply is what creates demand. It's easy for China to consume what they produce or to trade what they produce with others. What's impossible is for America to consume what we don't produce. Trade ends, America is stuck. All we have is paper. And that's why inflation is going to go through the roof in America, because we're going to have all this money with nothing to buy. And eventually Americans are going to start buying gold. I mean, they've been selling gold. They've been selling gold stocks. But, I've been telling people to buy gold, for over 20 years. When I first started recommending physical gold to my clients, it was under $300 an ounce. It's gone up more than tenfold. In fact, gold has outperformed the stock market for the last 25 years dramatically. I think the S&P is down maybe 65% priced in gold. So the whole bull market is an illusion created by inflation. Gold lets you see economic reality. But really, for the first time in my career, I'm actually telling people that for now, don't buy physical gold. Just wait, because even though the gold stocks are at new 52-week highs and they're up maybe, 15, 20%, they're jumping finally. But gold stocks are much lower than they were a few years ago, or 10 years ago, or even 20 years ago, a lot of them. Gold stocks are dirt cheap. And the reason for that is central banks aren't buying gold stocks. They're just buying the physical gold. But they buy the physical gold that the gold mining companies produce. And their profits are about to skyrocket because oil has never been this cheap in history relative to gold. That is the biggest cost for these mining companies. They're trading at single-digit multiples. Gold mining stocks have never been this cheap, not only relative to gold, but relative to the S&P 500. They're giving these stocks away. When you buy gold mining companies, you're buying gold that's still in the ground. And gold in the ground has never been cheaper in all of history than gold above ground. And so what I'm telling people now is, look, I think gold's going higher. Gold could hit 4,000 this year. But I think if gold does hit 4,000, gold stocks are going to catch up. That means they can go up 5x. Bitcoin, since it peaked in November of 2021, is down more than 30% in relative to gold. So with all these ETFs, with Super Bowl commercials, with electing the first Bitcoin president, with the Bitcoin Strategic Reserve, all that hype, and Bitcoin has gone down by 30% relative to gold. And nobody wants to acknowledge that, but that's one of the reasons that gold stocks are so cheap, because people that should have been buying gold stocks were buying Bitcoin, either through the ETFs or through MicroStrategy or any of this nonsense. The central banks have been buying gold, and they haven't had any competition from private investors. Well, when private investors wake up, especially the endowments and the pension plans and then the hedge funds, when they finally realize that they've got it wrong. Remember, all the experts said that tariffs would make the dollar go up. That's how little they understand of this global relationship. Everyone, every single economist, every market strategist kept saying tariffs are going to be good for the dollar. Tariffs are going to be good for the dollar. I'm the only one that said no, tariffs will actually be bad for the dollar. The year ahead inflation expectations now are 6.7%. The Fed keeps saying that expectations, long-term expectations, remain anchored at 2%. What are they talking about? Nothing is anchored at 2%. We've been adrift for a long time, and now we're at 6.7%. And you know what? It's going to be a lot higher than that. The Fed is completely wrong. It was about a year ago when Powell said he laughed it off. Somebody asked him, people are a little worried about stagflation. And he said, I don't know what they're worried about. I don't see any evidence of stag. I don't see any evidence of inflation. And I said at the time that that statement would go down with subprime is contained and inflation is transitory. It was something that was completely obvious that the Fed was oblivious to. And in fact, they don't even have a plan for stagflation. When somebody asked him about it at a press conference, he just knocked wood and said, well, we just hope it doesn't happen. And that's because they can't do anything about it. In fact, all of the stress tests that the Fed puts the banks through, when they have the most adverse economic environment, has interest rates falling sharply. They've never stress tested a bank for stagflation. They've never tried to see what would happen to American banks if we had a recession with rising interest rates. And the reason they probably never did that is because they know every American bank would fail. So we have a completely insolvent financial system, which is another reason that people want to pull their money out and buy gold, because then, you own something. You don't want to just be a creditor of an insolvent banking system. But rather than buying the gold, buy the gold mining companies, because that's where, if you want to buy gold, somebody's got to mine it, right? And there's so much gold that needs to be bought. All these central banks, if you look at the dollar reserves especially in the emerging market economies, how much dollars they have to divest themselves of. They have to take all those dollars and turn a lot of it into gold. The gold's not there. So somebody's got to pull it out of the ground. And the companies that are doing that are going to make a fortune. I've been saying we were in a recession for a long time. That's why Donald Trump got elected. The government keeps lying to us about the economy because they're understating inflation. And inflation is masquerading as legitimate growth. But the public was living under hard times. Now, they voted for Trump because Trump promised to make everything better. Now, they're going to be very disappointed because things are going to get a lot worse. As bad as the economy was under Biden, it's going to be worse under Trump. As high as inflation was under Biden, it's going to be higher under Trump. Now, the same thing might have happened if we elected Harris. But Donald Trump did accelerate this process. He really upset the apple cart by imposing these tariffs. But if Trump didn't do it, the market would have done it eventually. But he's now set it in motion. And now the question is there any way to undo it? Is there any way to stop the air from coming out of the bubble? I don't know. Maybe Trump could come out and just call it all off, but it's hard to say that you'd be able to put these worms back in the can. The Fed needs to raise rates. That's what they're supposed to do. But they're not going to do that. There's no way they should cut. They never should have cut. They never should have stopped hiking. The Fed never got into restrictive mode. That was a lie because credit continued to grow to record levels in the government, in the private sector. That meant that credit was too loose. The Fed never had tight money. Also, look at the price of gold. You know, when Alan Greenspan was Fed chairman, he said that he used gold as a way to tell whether he was too loose or too tight. And he said that if gold got up near $400 an ounce, that meant that he was too loose. And if it got down near 300, that meant he was too tight. Now, obviously, at the time, it was trading at around 350, right? So he was looking at gold as an indicator of whether or not he had the correct monetary policy. Well, Powell watched gold go from 2,000 to 3,000 and cut rates. What was that telling you? Gold was telling Powell that he was making a mistake, that rates needed to be higher. But the reason he's cutting rates is because we're insolvent and we can't afford higher rates. But I think the Fed is eventually going to cut rates and go back to QE. But they're waiting for everything to collapse because they don't even know that it's going to collapse. But they're waiting for some signs that the financial system is buckled. You know, maybe they want to see big layoffs, which are coming. We're going to have widespread layoffs in the United States because the whole service sector economy is going to shut down because all the imports are going to be cut off. So we got nothing to buy. All these businesses are going to be going into bankruptcy and laying people off. But when the Fed cuts, it goes back to QE, that sends inflation through the roof. It's high, and it's going to be a lot higher. And then it sends the dollar through the floor, and it's actually going to send long-term interest rates higher. We're at the end of the road here. I think that there's going to be a massive loss of confidence because it's been a confidence game the entire time. But look, this is going to be a financial crisis much worse than 2008, but it's not going to be global. It is a U.S. crisis. It's not a global crisis. It's actually liberation for the rest of the world because they're going to be liberated from the burden of supporting the U.S. economy. That means more for them. You know, we've been living above our means. Well, that's only possible because the rest of the world has lived beneath their means. Well, they don't have to do that anymore. They don't have to produce stuff for Americans anymore. They don't have to loan their savings to America. They don't have to invest in the U.S. financial markets. They can invest in their own markets. They can consume their own goods. They can invest their own savings. So our loss is their gain. And so this is going to be a global boom. It's like a giant weight has been removed from them. And now the global economy can be a lot stronger without having to drag the U.S. consumer behind. It is a long-term shift, and it's been going on for a long time. But gold is going much, much higher. I used to think back in 2009, 10, 11, back when they started QE, I was thinking gold would go to like 5,000, when gold was like 1,000, and it didn't get there. But now that it's 2025 and we've created so much more money and so much more debt than we had back then, 5,000 is nothing at this point. That's just a pit stop on the road to much, much higher prices because we have to, catch up to all the inflation that we've created. So, now you're looking gold could be, 20,000 or more. I don't know. But a lot of it isn't gold going up. It's the dollar going down. When the United States, was first started in 1789, you only needed $20 to buy an ounce of gold. And about 130 years later, when we established the Federal Reserve in 1913, you still only needed $20 to buy an ounce of gold. So the dollar and gold were very stable up until the creation of the Federal Reserve. Now, that didn't change until 1933 with Roosevelt and the Great Depression, and he devalued. And now you needed $35 to buy an ounce of gold. But that was until 1971, $35. And then we went off the gold standard completely. And now gold goes from $35 to over $3,000. So gold has gone up more than 100x. But gold hasn't changed. It's the US dollar that has lost more than 99% of its purchasing power. When the dollar was backed by gold, it didn't lose any of its purchasing power. It was only when we went to a fiat system that the purchasing power was destroyed. So when I'm talking about $20,000 gold, gold is not more valuable. The dollar is a lot less valuable. And so you need a lot more dollars to buy that same ounce of gold. We don't need a reserve currency. We just need a reserve. Money needs to back up currency. So all these foreign countries are going to use gold because that's what they used before the dollar. Remember, in Bretton Woods, we got the world to use the dollar as the reserve instead of gold. They were using gold. But the reason we got them to use the dollar is that we said, hey, the dollar's as good as gold. It's backed by gold. You can have your gold whenever you want. So just back your currency with dollars. And in the meantime, you can buy our treasury bonds and you'll get interest because you don't get any interest on gold. So it seemed like a good deal. Have your cake and eat it too. Own gold, but get interest. But then, of course, we screwed them because we defaulted, right? Hey, we're not going to give you any gold. You know, you screwed up. You trusted us. So the world's just going to go back to a gold standard. That's what's happening. You know, they may have other currencies in reserve, but the primary reserve asset has got to be gold. And that's why there's so much more gold that central banks need to buy. I think everybody is going to want to own their own gold, to have it within their own borders, to keep it secure. Because if you have gold stored in the US, what's to stop the US from just sanctioning you and taking your gold? It's not really yours if you let the US government control it. So I think most countries, if they have gold stored here, they're going to want to repatriate it to make sure that they've got it. The world traders are pricing in a global recession. It's not going to be global. It's going to be in the US for sure. And it's probably going to be a depression, not just a recession. But it's going to be an economic boom outside the United States because now the world doesn't have to finance the US anymore. The world can reclaim all that capital and all that purchasing power. The overvalued dollar has been a burden on the world. It's been a boon to Americans. We've lived off the overvalued dollar, but that is imposed a cost, particularly on the emerging markets. So I think those are the stock markets that have the most to gain from the dollar's demise, the emerging markets. And of course, the emerging markets companies, they have a lot of dollar debt. See, the whole world has a lot of dollar debt. And when the dollar crashes, that debt's gone. It's like it's wiped out. So it's a huge debt jubilee as companies that borrowed in dollars no longer really have to pay it back. I mean, sure, they have to pay it back, but so what? The dollars are so cheap. It's easy to pay it back. Where are we going to get money to buy gold? We're broke. We're running multi-trillion-dollar deficits. So how are we going to buy gold? Are we going to just go into deeper debt to buy more gold? No. I mean, it's the countries that have surpluses that are buying the gold. We're borrowing money, and we can't even afford to finance our debts anymore. The Fed's going to have to print all the money now, which means massive inflation. Unfortunately, you know, they were talking about buying Bitcoin for the strategic reserve. Hopefully, at least this puts an end to that nonsense. Well, the day of reckoning was long overdue. And again, we ended up pricking our own bubble. But yes, I mean, the dollar's reserve currency status is going to come to an end. How long that process is going to take, it's hard, but it's underway right now. Yes, we're going to have stagflation, but not like the 1970s, much worse. We're going to be in almost like a depression, and inflation is going to be much higher than it was back then. So very high inflation, I mean, a horrible recession. So the worst possible stagflation. Now, in order to get our economic house in order, that pain is necessary. In order to correct all the imbalances in our economy that produce these trade deficits, that produce these budget deficits, that resulted in the hollowing out of our industrial base, things that Donald Trump rightly points to as problematic, in order to get to the root cause of that, yes, we have to go through a huge austerity. And so we have to go back to work. We have to stop spending. We We have to start saving. We have to build factories and supply chains, and it's going to be a hard work. But, there's a big payday at the end of that if we do it. But if we don't do the right thing, then we're going to have a lot of pain, but it's not going to be constructive. It's not going to lead to long-term gain. It's just going to lead to long-term more pain, worse pain. And so, it all depends on what we do. But right now, the people who are advising the president are giving him very bad advice. And he has a grave misunderstanding of the U.S. economy and our place in the world and what we need to do to actually address the concerns that he has and that I share. Where we are now, having Congress or the president controlling the paper money supply is worse than having the Fed do it. And, people think, hey, Peter, why are you defending the Fed? I'm not defending the Fed. I'm the Fed's biggest critic. I just think it'll be even worse when it's being controlled by the president. As bad as the Fed has been when it had a modicum of independence, imagine how what's worse is going to be when it has none. But this is the threat that is looming on the horizon. This is one of the reasons that I am just super bullish on gold and silver and incredibly bearish on the US dollar.